Okay guys, so first trading session of 2022 and the US dollar is already getting very strong against the Japanese yen. My members are in this trade, we're in a good profit. I'm just going to explain to you why the dollar's been so bullish against the Japanese yen at the start of this year and why we saw the dollar getting so strong against the Japanese yen in 2021 coming into the new year. So the dollar's been getting very strong because of one key reason: interest rate differentials. At the moment, we've had a big spike in the government bond yield, which is just the interest rate paid on government debt in the United States. If you borrow money to the US government, they're going to pay you a certain amount of interest per year. And today, if you buy a US bond, it's going to pay you 1.62% in interest per year. Compared to Japan, if you borrow money to the Japanese government, they're only going to pay you 0.08%. So there's a differential in interest rates that favors investors to buy US government bonds compared to Japanese government bonds. And the reason rates are going up in the US is because inflation's at 6.8%, very high, above 2%, which is the inflation target by the Federal Reserve. So the Federal Reserve has to do something to bring that inflation back to target. Otherwise, US dollars lose their purchasing power to inflation. So the markets are expecting the Federal Reserve to raise rates in June to 0.5%, to raise rates in November to 0.75%, and then to raise interest rates again in December to 1%. Because if you own a mortgage, credit card, car loan, student debt, as that interest rate goes higher, it causes the interest payments of everyday citizens in the United States to have to pay more interest, including companies that borrow money, and that reduces the spending capacity of people. It brings down the demand for goods and services, and that's how you bring down inflation back to target. So with the interest rates going up in the United States, you look at Japan, and at the moment, inflation is at 0.1%. So nowhere near the 2% target. So inflation is not a problem in Japan. And that's why the markets are predicting no interest rate hikes in Japan anytime soon, because they can't even get inflation to their 2% target, let alone bring it back down towards their 2% target. So what that means is, if you look at the difference between interest rates in Japan and the United States, what you can see here is in this chart, I'm showing you the 10-year government bond in the United States. So this is the interest rate on 10-year government bonds going back to 2011. You have in column D the interest rate on Japanese government bonds going back to 2011. We look at the difference, so we just minus the Japanese interest rate from the US, and then you map the USD JPY exchange rate on top. And what you see is when the blue line is going higher, this is showing you that the United States has a higher interest rate than Japan. And look at what the currency pair does. It follows the differential, and the currency pair is in orange. Why is this? Because insurance companies, pension funds, investors, anybody who wants to invest their money but don't want to take risks in the forex market, the crypto market, the commodities markets, or the stock markets, they just want to buy government bonds because you're guaranteed to get your money back plus some interest. They're going to look around the world and just see who's paying the higher interest rate. And when the United States is paying a higher interest rate than other countries, it's the safest place to park your money because the US is the world's biggest economy and they've never defaulted on their debt. So what that means is, as the US interest rate keeps going higher relative to Japan, investors in Japan are selling their Japanese yen, buying US dollars, and buying US government bonds. And that's why the exchange rate follows the interest rate differential going in favor of the United States. You can even see here as it turns over and becomes less favorable, that's when the Japanese yen strengthens against the US dollar. Soon as it goes back up in favor of the United States, the exchange rate goes back up higher. And you can literally see there are a mirror image of each other in how they perform in the exchange rate. And you can see at the moment, the US interest rate is now going again higher relative to Japan. And there's no surprise that the exchange rate is now following this differential in interest rates. So you can now see the fundamentals driving this currency pair higher. So you understand now what's going on. This is what's pushing this currency pair to the upside. And this is why we're buying the US dollar against the Japanese yen, because at the moment we're now having a spike higher in US government bond interest rates because the markets are predicting that the central bank in the US is going to be raising rates soon. So as this interest rate keeps rising, it just keeps dragging money out of Japan and into the United States. And that means investors, as I was saying, are selling their Japanese yen, buying US dollars. And that's how you fundamentally catch a trend. And then you can use like technical analysis or risk management because you understand the fundamentals behind the trade. So for all my members, I give them a free Forex video course explaining this when they join my service. It's on my website, the login area to all members. It's a 60-day trial on my service. So for an example, I post videos in my Telegram group where I'll be sharing analysis on why I'm trading the US dollar, or I'll be sharing other videos like the Norwegian krona where we're buying that currency. I'll be giving information on stock markets, for an example, cryptos, commodities, all the different things that we're trading. But we get a lot of video updates, and they can follow my trades when I'm getting into the market as well, so they can learn and they can earn at the same time. So guys, if you would like a 60-day trial, send me a message. My team will set you up and you can get trading in 2022, and you can learn at the same time as making some money. So send me a message.